Next on our list is another industrial giant which has had good years and bad years, and that's Nampak. Remember, they are South Africa's largest player in packaging, which means everything from metal cans that get used to put food and Coke and that sort of thing into, glass, a very big part of the business, furnaces which manufacture beer bottles, mostly for South African breweries, and then paper, although they've narrowed that division down a little bit, tissue and that sort of thing. And then, of course, also plastics, which are those PTFE, dumpy bottles and all sorts of enclosures for milk and that sort of thing. Market capitalization, 22.5 billion. Price to earnings ratio, 14.55. Dividend yield, 4.65. Was on a perceived road to massive recovery and then sort of disappointed, particularly in the glass division recently.
Yeah, no, definitely.
So what gives?
Yeah, I mean, the latest interims were fairly disappointing. I think you'll see the movement in the share price chart when we have a look at it. But, you know, it's difficult. Again, this is now one that's far more South Africa focused. So, you know, still about, I think it's just over 70% of the revenue comes from local. But their big drive is going to be into Africa. That's really
Angola, Nigeria.
Nigeria as well. And I mean, there's a lovely chart in the annual report that if you look at where they see the opportunities, and they just sort of adding projects across the spectrum, glass, plastics, paper, all over the place. They're buying, you know, buying and starting up greenfields operations in these manufacturing jurisdictions. I mean, one of the things that they also say, that, you know, especially if you look at Nigeria as an opportunity, I think Nigeria is the second largest producer of pineapple juice, yet they import pineapple juice. And I mean, they're saying, let's take advantage of this African industrialization, and that's how we're going to make our money. And the focus is to move into Africa. You're not seeing the earnings come through yet, but that's, I think, where the growth opportunity for the company
is. And you're
is.
right, it is one of the more exciting companies because that number is rising. It's only 25%, but it could get a lot bigger. So management, Andrew Marshall, who was credited with the recovery, has left just before this stumble. Andre de Ruyter, ex-Sasol guy, looks pretty solid.
Yeah, so far, yeah, I mean, is that Sasol for 20 years? And I remember, you know, like especially in like a polymer business, I mean, oil is a big input as well. So having a solid understanding of your input market is also
and a new broom to sweep clean. Further look at some of the divisions, like they shut down or closed certain of the paper tissue area, not making loo paper anymore. That the low margin business if ever there was one. Okay, so now it's had a stumble like we saw there. You're going to go hot or not on this one? Tricky, huh?
No, it is very, very tricky. I think, I mean, the PE has re-rated slightly. I mean, it was trading up at an 18. I thought 18 was maybe a bit fully valued. I think I'll go hot. I think it is a hot company. I mean, but looking 3 to 5 years out, once Africa, once they prove themselves in Africa.
Okay, I'm going to err on the side of caution because we got a little bit burned on this one, but I'm reckoning it's not hot until we see further progress.